Okay, so today I'm really happy to welcome on co-founder of the Alkemi Network, Brian Mahoney. Welcome, Brian.
Thanks for having me on, Jamie. Great to be here.
So you describe the Alkemi Network as decentralized finance for centralized institutions, DeFi for CeFi. And the goal of Alkemi is to bridge CeFi to DeFi with institutional grade products tailored to the next frontier of capital allocation. So several reasons why I've got you on the show. Firstly, of course, DeFi is hot, still hot since the summer of 2020, but it's evolving or maturing. And of course, the big question is, how can we grow the amount of capital that is deployed into DeFi? And of course, bringing in institutions is going to be the way that that happens, beyond just extending DeFi across what is a relatively small capital pool already allocated within crypto.
The next frontier of capital allocation, as we like to refer to it.
Exactly. Now, you've also taken a different approach to this. So, disclaimer, Outlier has been working with Alkemi for close to 2 years now, maybe even over 2 years. In fact, the last time I saw you, Brian, was doing karaoke in a Shanghai or Beijing nightclub. And what happened after that stays between you and I.
Stays in the family.
Exactly. But we do have video footage, in fairness, on both sides. So if I do release it, I guess I'm going to have to face the repercussions myself. But what we've liked about you, working with you, is that you've taken, let's say, a different approach to DeFi. Much more methodical, much more patient, especially considering that you have been around for 2 years, including everything that was going on in the crazy summer of 2020. So you didn't just spin up a protocol and kind of join the party offering this unsustainable liquidity mining, which effectively just saw money, the same money, effectively move around between protocols. You've taken a much more patient, diligent approach. I guess that's tied to the fact that you are looking to onboard a different type of stakeholder in CeFi rather than degens. And so, 2 years later, mainnet is live, products live. You've got 15 plus launch partners. We're going to talk about this a little bit later. $30 million of assets under protocol, AUP. And the only constraint there has actually been, your kind of deliberate approach to conservatively bringing on partners, albeit in a kind of fair and even way. And again, we're going to talk about this a little bit later. But I think to understand Alkemi, you really have to understand the CeFi mindset, kind of requirement for them when they're looking at something like DeFi. And what's compelling about Alkemi is that it is derived from a team of people that understand that, at the same time understand and are native to DeFi. And so you propose that by removing these barriers, or at least kind of mitigating or accounting for them, this could release 100 plus billion opportunity for both sides, for both DeFi and CeFi. So normally we kind of do a bit of a deep dive into the individual founder that we're speaking to's background. But I think to kind of pick up on this story of DeFi for CeFi or CeFi for DeFi, that's actually very representative of the team and you and your co-founder. As I said, you're a co-founder. And so your fellow co-founder is Ryan. And I think you, in kind of in conversation, pitch materials, or whenever you do media, you refer to yourselves individually as representative of the embodiment of CeFi and DeFi. So Ryan being the DeFi end and yourself being CeFi. So why don't we start there? Tell us a little bit about the respective backgrounds and why that's relevant and how that's informed a lot of your thinking at Alkemi.
Thanks, Jamie. Yeah, I'll just say, very much we've taken a conservative approach, no doubt. Growing the protocol and the company very organically over the past 2 years, and it's been great to be a part of the Outlier family and working with you and the team. And said another way, we've avoided participating in the I'll call it the passing the hot potato around of in the context of food tokens and what yield farming is about. We love what's happening in the space, and we're very much on board. We do some of that ourselves on the side, sort of thing. But in terms of when it comes to growing the protocol and Alkemi and scaling up, we've definitely been building it for institutions and taking this very conservative approach, and with the kind of institution in mind first. I'll jump into my background a little bit, and then I'll touch on Ryan as well, one of my co-founders, and then I was actually a third co-founder as well, Ben Cooper, who's been with us since the beginning as well, and he's Ben is responsible for all the beautiful branding, and he's our director of UI and UX. So myself, I've been in the capital markets space. I like to say crypto is just kind of the extension of capital markets. I've been in capital markets now for over 12 years. Started out my career in the more traditional finance world. Had a stint as an investment banker at Lazard, and then joined HSBC in your neck of the woods over in London, and was there for about 6 years, and had quite a wide variety of experience there, working in the M&A kind of leverage finance groups, as well as working for different CFOs across the organization. So I've got a wide exposure to a number of different kind of financial structured products, and how the way of the traditional capital markets infrastructure works, which is very, very relevant to what's happening in crypto. And I'll kind of touch on that later in this conversation. After leaving the banking world, I got pretty interested in early stage technologies, and joined wasn't fully down the blockchain rabbit hole yet, but so I joined an early stage investment firm in New York. That was where one of the companies that I was sourcing for that VC was a company by the name of Alpha Point. They were an early player in the exchange space, and was there. Ended up flipping over from the early stage fund to joining Alpha Point to lead their corporate development and business development for the company. Saw it undergo tremendous growth. It was about employee maybe 15 or so. And saw it go to about 130 heads at the height. So it was crazy growth over a 2-year period, and got me a very, very, intense sort of drinking from a fire hose exposure to one, crypto, and two, just institutional capital allocators in crypto more broadly, which has been very relevant. And one of the things I noticed when I was at Alpha Point, we had at the height, we were powering about 120 or so exchanges around 40 countries around the world. And there was, I noticed this opportunity to, one, that there's these macro tailwinds behind kind of what we were doing, that the world was, continuing to move more on chain, meaning, new tokens were popping up left and right as kind of the first thing, with the ICO boom. And then that was sort of evolving into, these centralized exchanges were looking for ways to boost their liquidity, many of which were Alpha Point customers. And so I ended up leaving Alpha Point, and joined up with Ryan and Ben and the rest of the team to get Alkemi off the ground. And what we've been doing is addressing that problem head on. One, just solving that kind of we call it the decentralized liquidity paradox, which is, if you think about it, liquidity and decentralization are kind of these two counter opposing terms, right? Liquidity requires the concentration of wealth, while decentralization requires the separation of wealth. So how do you kind of have these two forces interacting with, in these protocols that are decentralized in nature, but require liquidity to get off the ground? So that was the kind of the hook that brought us in to start Alkemi. And then we've since expanded to, build this bridge to drive centralized finance into this space. And real quick, I'll touch on Ryan's background as well. So he's the DeFi guy as part of the team. I'm I guess, the CFI guy. He's a 3-time entrepreneur, as a full stack engineer. He's based out of Canada, although he's a dual citizen of Canada and the US. Has been basically an entrepreneur his whole life. He's also very philosophical in nature, which has served us well in the especially when you think of rethinking capital markets from the bottoms up, and how you can drive incentives. So he's been one, just designing the protocol and leveraging on his full stack engineer experience and entrepreneurial experience, but also it has been an absolute weapon for us as part of the overall team as we move to continue to innovate and launch new products here as part of the Alkemi Network.
Great. And so I've heard you refer to this bridging between CeFi to DeFi as crossing the crypto chasm. And you kind of refer to the 3 C's as problems to solve: capital, connectivity, and control. Can you talk us through those?
So, CeFi, they want to come into DeFi, right? They see the opportunity. They see it's the future. They feel the need to kind of join in on the innovation that's happening there and want to participate in the next wave of capital allocation. But they're blocked, right? They're blocked by what we call the 3 C's. And those C's are called, we define as capital, control, and connectivity. So first I'll start with capital, which is institutional grade capital. What I mean by that is the juice worth the squeeze, right? Is there enough liquidity in the on-chain capital world or the DeFi world for these, to make it worth the ROI or the effort for the CeFi to come in? It wasn't prior to the DeFi run up in the summer. Now it's big enough at 15 billion and growing that the juice is worth the squeeze. So that's starting to be solved. However, what hasn't been solved yet is the control and connectivity issue. And that's where Alkemi comes in. In addition to channeling institutional grade liquidity, we are providing a controlled environment, meaning a way for the institutions to tick the compliance box. So these are things like KYC and AML, right? How do you enter in if you're a centralized based asset manager? Just pick Galaxy, for example, right? They're kind of your typical, big, large asset manager in the crypto world, right? How do they get their compliance department to sign off on, dealing with these permissionless networks that, there's AML and KYC risks for these platforms if they integrate into it. They don't know, the trusted counterparty problem, right? They don't know who they're dealing with on the other side. So having a liquidity pool that, addresses those problems is a very much a winning strategy for kind of bringing these institutions in. And so that's what we're focused on solving, is providing a compliant and controlled environment for the institutions to come in. And then the third C is connectivity, and I'll touch on what we mean by that. So, we all know crypto and DeFi moves extremely fast, right? I mean, just look back, reflect on 2020 and, the yield farming summer. A lot of CeFi institutions actually missed that, right? I mean, if you ask around, most of them were caught kind of off guard by the run up there and the yield potential. So and that was because they weren't connected into it, right? And also there's new protocols popping up left and right. Forks of Uniswap and forks of Compound, some of the major guys out there. New competitors popping up, and so how do you stay ahead of the game and integrated? One from a protocol perspective, but two from a liquidity perspective and the assets there. And so what we're doing is providing a way for these institutions to seamlessly access DeFi-based markets. And the way we're doing that is, we're focused on solving that connectivity gap and having a very seamless kind of turnkey solution that the institutions can, plug in and stay competitive and still get access to the yield opportunities that the space provides.
So maybe let's stay at that level, because I think there's a few things in there that are really interesting before we go, we deep dive into, the Alkemi Network and its various products. So on the capital side, as you say, is the juice worth the squeeze? How is the attitude of people in CeFi, not already in crypto, towards the space? Because I've kind of heard it often repeated, it's just not big enough. Even if they wanted to, they couldn't deploy a meaningful amount of money for it to be worth their time. So have we passed that threshold? And then I guess more generally towards the kind of sentiment towards the space, has there been a shift since this last bull run on Wall Street as to the attitude towards the space?
Great question. So I'll say that the sentiment is still very much alive and well. People are very interested in kind of this new world of DeFi, or what we refer to it as just on-chain capital, right? There's this wall of money that that wants to come in and move on to the blockchain. And that's what people call as DeFi. And it started to trickle in at 15 billion. And that got the attention, prior to the attention of these institutions. Prior to last year, 2020, and the yield farming run up, it was kind of and by the way, we were actually calling ourselves in DeFi prior to the yield farming. But it wasn't this kind of household term that the institutions were keeping an eye on, and now they are, because they see the potential, and the juice is worth the squeeze now, and it continues to grow, because where this is going is this is a new frontier for structured finance in general. It's got this catchy title by the name of DeFi that describes the whole space of what we call just on-chain capital, or structured finance is a new paradigm, because it's effectively infinite. You can get infinitely creative with these different financial instruments. And, there's the amount of just rewards and competitiveness of this that the DeFi world offers for these institutions is, it scratches their itch, right? I mean, that's what drove the economy in the previous decades, right? And prior to like 2008 with the crisis of that, I mean, there was the mortgage-backed securities and CDOs, and prior to that, going back to 1700s, the invention of the stock market. So structured finance has been around for a long time. It's just now it's being fully digitized and moved on chain into a way that you can cooperate on a global scale. And so that's what DeFi represents. A lot of these institutions see that, and they're salivating at the opportunity to get in. Once the compliance and connectivity problems are solved, we're going to see that flood of money.
Yeah, and I guess it is, if you speak to most bankers, like IT is the bane of their life, right? It's a barrier to innovation, because they just have these layers and layers of decades worth of IT infrastructure.
Look no further than my previous employer, right? HSBC, that grew out of acquisition.
Right, and then if you look at DeFi, you have this ridiculous rate of technical innovation as this kind of evolving, highly composable DeFi stack. And so, how do you reconcile those two worlds, just at an IT level, a technical level?
It's a great question. So the example that I'll use is kind of what Coinbase has done in the early days with Bitcoin, right? They allowed for the reason why Coinbase took off. I mean, now they've since expanded and have a whole host of other features. But if you go back to the early days of when they were founded and kind of the core use case, it was a simple on-ramp to get access to Bitcoin, right? They owned the Rails experience between the analog, I call it money 1.0, right? The analog fiat dollar and Bitcoin, which is kind of this digital money 2.0, right? They provided a seamless experience for that to happen, and I think the player that can own that from kind of digital money 2.0, which is Bitcoin or stable coins even, and move into and conquer that money 3.0 world, which is the world of structured finance and DeFi, and have a seamless experience that these guys can plug in and have basically use it as a turnkey way to their existing operations, and that'll be the win of that company. And so that's what we're trying to do is solve that gap and have that kind of seamless plug-in between the two.
Great. So let's jump into the product now. So you refer to kind of three pillars to the network: access, earn, and manage. Could you break down the constituent parts of these three pillars, business areas, and then I guess map how they then solve these three problems that you outlined earlier?
Yep, sure. And thanks for that. So what we're doing at Alkemi, it all is based off the three pillars, as you mentioned, the three C's: capital, control, and connectivity. So our products naturally reflect that in their DNA. So you can think of Alkemi Network as an umbrella. We have the protocol. Our first go-to-market product is what we call Alkemi Earn, and this is a liquidity pool that is permissioned, meaning everyone that interacts is a trusted counterparty and is whitelisted on the platform. And users can, in order to benefit from Alkemi Earn, users borrow or lend across four core asset markets. So the markets that we currently support are wrapped Bitcoin, ETH, DAI, and USDC. And these are live. We're on mainnet. We're actively onboarding customers and moving to expand the growth of liquidity as well as the other assets that we support as part of Alkemi Earn.
So on Alkemi Earn, I believe you've onboarded, is it 10 LPs, capped at about 200K, and that's been quite deliberate, right? So there's 2 million AUP, but you kind of wanted to make sure that there was an equal playing field.
That's exactly right. So there's been a lot of interest on joining Alkemi Earn because we're solving this. We think we definitely found the product market fit, sort of that nascent term that everyone throws around, but you don't know it until you feel it, right? Until you found it. So we're feeling it right now. And so we've launched this liquidity mining program as a way to bootstrap and the protocol now that it's on mainnet and move into hyperspeed growth as we scale up here. So as part of that initiative, we've launched a liquidity mining program whereby we've dedicated 35% of the overall Alkemi token supply to liquidity providers. So these are depositors as well as borrowers. It's a 50-50 split. And we're targeting as initial checks for deposits 200K each across 10 plus liquidity providers. We have a target of 2 million to get to here in the next basically a couple of weeks, which we're tracking to quite aggressively. And then from there, we're going to continue to expand. But this is just a way to get full kind of an even level playing field to start and buy-in from many of these institutional counterparties that we're working with, and then scale up from there and take them with us on the journey.
And can you share some of the partners that are involved as LPs?
Yes. So I'll touch on a few names. There's more kind of where this is coming from, but a few of the names. So we're working with a company by the name of Shift Markets. They are a white label exchange provider. It's been around for 12 plus years in New York. They got their start in FX and have since moved into crypto. In addition to participating in Alkemi Earn as a liquidity provider and borrower, they are also, this is a bigger partnership for us too, strategically. They are also providing a gateway point to the CeFi world, meaning we are offering DeFi-based products on CeFi platforms. So they power over 50 exchanges around the world as part of their offering. And so we're going to be rolling out Alkemi Earn downstream into their customers to just serve as additional portals or gateways to our DeFi pool. In addition to Shift, we have a few other names that I can mention right now that are as part of the kind of early providers. These are asset manager and hedge fund types by the name of Ledger Prime and JST Capital, as well as we're working with some other protocols that we've integrated into. So we support Chainlink and have an official partnership there. We've also done a partnership with a Euro-based stablecoin provider. So this isn't live on the platform yet, but we're going to be, we have an announcement coming up here in the next week with Monerium. They're a regulated Euro-based stablecoin issuer out of Europe. And then we're also plugging into some other DeFi protocols and networks as well. And we're a part of the Conflux DeFi ecosystem. So looking to expand our reach into the eastern part of the world.
Great. Yeah. And I think, again, it's testament to how you've quite methodically built out, very selectively the partners that are going to bootstrap the network before you increasingly open it up. And so I know that you've been thinking a lot around this kind of progressive decentralization.
Yes, that's exactly right. So we're in this for the long game, right? What we see that what's happening right now with there's macro tailwinds and overall just in the world, right? 2020 is this inflection point. We were just talking before this. 2020 has been this inflection point for society at large. There's 5 years of change happening in 10 months, right? And everyone is living their world, increasingly living their lives online, right? Well, it would only make sense that our money is inherently digital as well, and capital markets for that matter. So for us, we see that that the world is going to continue to, and starts with capital markets, right? Have their money and capital living online, and that's going to be living on blockchains. And so we've been positioning ourselves and kind of waiting for that right opportunity to strike and come to market quite aggressively, working behind the scenes, sort of in, you can call it stealth mode, although that's a bit cliche, but We've been kind of doing that behind the scenes, working with partners, and haven't invested too much in the marketing efforts yet. But that's all changing right now. We're officially on mainnet. We're full steam ahead. We're pushing aggressively, and we have plans to get to. We have an aggressive target here to get to 100 million in what we call assets under protocol here in the next few months, and then we'll be moving to open up the network, decentralized, open source, staying true to the DeFi ethos, but bringing our institutional community and stakeholders along the journey with us, and be moving to issue the token as part of that, down the line later this year.
Yes, interesting. So basically, whilst it's totally permissioned at the moment, presumably you will begin to open up aspects of that to the wider DeFi ecosystem, based upon solving for some of the issues around counterparty risk, right?
Yeah. I mean, if you talk to any kind of major CFI, if you're CFI is this, we keep using this term, but just anyone that's off chain, right? Any firm. So these are like centralized exchanges like Coinbase, Binance, or and I'm just throwing out names here, or even like a custody provider like a Fireblocks or Curve or Copper. Or even like a payment or processor or stablecoin issuer, right? All these guys are operating, kind of interacting with the blockchain, but one step removed, meaning they're off chain, or my former employer, Alpha Point, right? These guys are looking for opportunities to come in, and so we're building tooling that meets their needs. And one of the top things that they have as a friction point is this concept of trusted counterparties, right? And many of them have regulatory-based licenses, and depending on where they are, which jurisdiction that they need to attain to, they need to get their compliance departments to sign off, and so in order to get their compliance departments to sign off so that they can move and take advantage of some of these on-chain capital opportunities, the trusted counterparty problem needs to be solved, and so that's what we're optimizing for, is building an experience on that, anchored on that.
And presumably that then gives them access to the money markets, the DEXs, AMM platforms, liquidity miners, like the full spectrum of DeFi.
Yeah. So to bring it back to crossing the chasm, and we started off kind of with that analogy. So I want to bring it back to that, just full circle. So in the book, if those people who haven't read it, there's this concept of a beachhead strategy, right? How do you cross into a new market? The author describes that as the beachhead, right? And it dates back to this the U.S. or this World War II analogy, entering on the beach and invading a country. So the beachhead strategy is, for us, this permissioned liquidity pool, right? And we're starting there because we want to make sure that we're optimizing and building trust with our institutional community, which is, I think, a little bit of a different approach than a lot of the other DeFi protocols have taken, which are much more retail driven. So we're very much focused on building an institutional community, and so that's as part of the requirements from an institution side. You need to have this trusted counterparty, and the only way you can really achieve that is if you have a walled garden, living liquidity pool that lives on chain. And so that's our beachhead. We do have plans to remove the walled garden, right, and open up the protocol, one from a technology and open source perspective, but also from a liquidity perspective. And so this is where things get really interesting. And this is where we think, this mixing of permissioned and permissionless liquidity is like, the $1 trillion plus opportunity for the crypto ecosystem at large. If you can connect these two worlds, right? Forget 100 billion. It's. I think this is the really one of the biggest opportunities that's not talked about in the space, is how do you connect these two worlds. And so we're toying around with some interesting ideas here. We don't. I mean, it's a very complex issue, which is why it hasn't been solved. But we think there's some interesting things you can do with a token as a sort of verification mechanism, and driving that, have the ability to transact in a trustlessness environment, but still obtain trusted counterparties within that. So, we have, there's more to come on that. I don't want to go too far down the rabbit hole there for some of our plans there, but, keep an eye on what we're doing there in the coming months.
Yeah. So let's jump back. So we mentioned the 3 pillars. We talked about earn. Could we talk about access and manage?
Yes. So Earn, just to reiterate, so Earn, that's one Alkemi Earn. That is the product, our first product over on the Alkemi network as a whole. And Earn, in relation to Alkemi Earn, refers to the ability to just earn yield on your assets, right? So if you deposit funds as a liquidity provider on Alkemi Earn, you get interest rate return on that. It is variable, so it's algorithmically driven, but very transparent. And there's some interesting opportunities to kind of expand on that, but starting with a variable earning interest. And then for access and manage, this kind of again comes back to the the control and connectivity points that we were talking about earlier. So as an access point, there's three ways you can access. You can come in through our front end. We have a beautiful front end designed by Ben Cooper, one of the co-founders, and you can use your Web3 wallet to interact. So MetaMask we support, Fortmatic. We have actually a multi-sig capability as well that we've done with Gnosis Sig. So very much Web3 supported access points.
I was going to say Multisig is going to be very important for institutions as well, right? Because the custody of assets isn't going to be one person, right? There's going to be multiple people if you're talking about, millions of dollars worth.
That's right. Yep. So for us, these institutions are the ones that are at least in kind of DeFi now are comfortable with MetaMask, but there's opportunities to improve on that. And so, we've opted for a multi-sig based point through our front end. That the institutions come in. But in addition to front-end access, you can also come in through API. So we have a full API suite available publicly online. So for the folks that prefer to come in programmatically and through our back end, they can do that. And then the third way, and this kind of goes back to what I was touching on with Shift Markets and the partnership there and some of the other CFI infrastructure partners that we're in partnership with. This is we think there's an opportunity to effectively white label our pool and roll it out across the kind of the off-chain world, providing downstream DeFi access from a CFI front end. And if you listen to some other interviews with kind of DeFi founders in the space, this is what a lot of people think might be the future. Is DeFi capital markets as a whole on chain is the plumbing, and then there will be all these different kind of off chain front end and CFI access points. And so we're positioning ourselves for kind of maximum flexibility, channeling the money Legos, all of that, and then but also kind of catering to the customer and partners' appetite depending on how they prefer to access Alkemi.
Okay, so let's zoom out and fast forward to mix my metaphors. What happens? Does DeFi eat CFI? Does it disrupt it? Does it transform it? Or a little bit of both?
I think the two worlds do come together. And this term DeFi CFI will just go away. It's like saying, is crypto going to be referred to crypto, or is it just going to be referred to money? Right? I think you can just, there's no doubt if you just, reflect back on the past 12 months. I mean, I think the genie's out of the bottle in terms of, the digitization and financialization of the world, right? And that's being expressed on these protocols, via these protocols and the companies, off-chain companies that are the CFI companies that are interacting with them. So as it relates to DeFi, I mean, this is the frontier for new capital markets plumbing, and there's, I think the concept of CFI, DeFi is just going to abstract away, and there's just going to be, capital markets all in that's inherently digital, and it's going to become, especially for the next generation, that's all they're going to know. So we are, we're very optimistic on the future of what blockchains will provide as, this new paradigm for capital allocators.
Yeah, and the way that I always describe it is, DeFi, because of its hypercompetition, this like aggressive pursuit of both efficiency and yield, compared to CFI, which inherently doesn't innovate so much, certainly from a technological perspective. It might do with financial instruments, but the underlying technology, the rails that makes this stuff happen, there's not much of an incentive to innovate.
Extremely cost intensive for those firms too. I mean, keeping up with all the different forks and assets out there is, it's like the buy or build strategy for a lot of these guys, right? They got to answer that question. Do they bring on a bunch of developers that are Solidity native that can, keep up with that, or do they outsource and partner? And so, for us, we're kind of that outsource partner firm to help them to remain competitive.
Yeah, I mean, that's a really good point. There are only so many developers around, right? Especially in DeFi. And if they're in DeFi, they're largely doing their own thing. So, they'd have to pay an inordinate amount of money. I guess they could afford it to convince them to go, sit in a suit and work in a bank when they could just be a degen. So how much of this is going to be constrained or driven by what's happening at a regulatory level? And I mean that in a global context, but of course, you're sat in the US right now. There's different movements happening, both at the SEC and the Commodities Exchange. So, what's your perspective there?
We think regulation is inevitable. It's only a matter of time. The governments are and the U.S. is kind of, I guess, they set the path or the terms for everyone. And I feel like around the world, most others follow suit, unless, some specific countries. But mostly speaking, the U.S. is kind of the gold standard of regulatory, especially the SEC. So, we're very much, we are embracing regulation. And, I know that's a bit of a misnomer. Regulation and DeFi don't exactly mix, but I think that it's coming, whether we like it or not. So you may as well, get ahead of the curve there and build products that are, tailored to the institutional requirements from the compliance, yes, but also, regulation at large. And I think it gets a little murky with some of these like tokens being securities or not. So for us, our approach is, sticking with stable coins. Because those are like kind of the clear-cut use case that, not a security, very much a commodity and useful from a utility perspective as well. And then we'll kind of see how it plays out with some of these other asset classes on chain and the decentralized nature of it.
And I guess that's just going to be driven by, demand and, how they kind of play out over time as protocols. And so where do you see CBDCs in this, so central bank digital currencies? Do they have a role in what you're building at Alkemi?
I think that's going to accelerate DeFi, frankly. We view stablecoins as the gateway asset to all these different DeFi products and services, because it starts with, for a lot of these, right? Because what's happening is financial innovation. DeFi is just a catch-all term for financial innovation or structured finance, right? And you need a stable asset. You can't have, we've done it with these volatile assets, to date, but I think for institutions who are used to dealing with, stable assets and not having the price appreciation drop, overnight sort of thing, these stable coins are a great way to maintain the value of the assets that they're structuring. And so we're very much hopeful and optimistic for CBDCs, and frankly, view that as inevitable as well. So when the time comes to, onboard more of those types of assets, we're all ears and open arms.
Got you. Well, look, Brian, actually, when I think about it, it's been so long, you've almost become part of the furniture at Outlier, but actually you were our first DeFi investment. And I remember you guys even having to convince us that we should be investing into a DeFi project. And took several months of, conversations just internally at Outlier with our in-house legal counsel as to, whether this was something we should be backing. And it's great to see, of course, the markets evolved, but I think, how you as a project have executed alongside that. You've been very patient, very disciplined. So I'm really excited for you and the team to see what's ahead in 2021. I'm also very much looking forward to some more Shanghai nights. I think it's more likely we'll get a night out in Shanghai than we will anywhere else in the world, sooner rather than later, right? They seem to have things under control.
I'm thinking about turning that video into a non-fungible token, by the way, so we can't get you some rewards on that.
That would break records. It would break records.
Yeah, definitely.
All right, Brian. Well, look, thanks again for your time. Looking forward to seeing what happens in the year. Say hello to Ryan and co. And good luck with 2021.
Thanks, Jamie. And I'll just quickly wrap up on my side. So, thanks again for having me on. And, we've been certainly waiting for our moment, and this is it. So we're super excited about what's ahead. And, So if you're interested in learning more about Alkemi or joining us on the journey, you can find me on Twitter at BMAHO, BMAHO, or on Telegram at Blockchain Bry. We also have company channels. We're all under the handle Alkemi Network. We're very active on Twitter, LinkedIn, and Telegram as well, and building a community there. So please feel free to get in touch and send us a note. And look forward to seeing what the future brings. And thanks again, Jamie. Appreciate it.
Thanks for coming on.